Well, welcome everybody to webinar 1 bajillion and 2. It's not webinar 1 bajillion and 1, it's webinar 1 bajillion and 2. We appreciate you having here. We had some fancy tech that we thought it'd be pretty cool to use Teams. Yeah, thank you for that. Zoom, please. Teams is awful. We agree it's great for like one-on-one meetings. Wasn't really designed for this purpose. We're trying to get it to work with some other tech we had. It's a failure. We're going, you know, we'll go back to Zoom next week. Gary is also being a good son back in Kansas, hanging out with his mom and his sister right now. So he is not joining us. So you're stuck with just us and Jack, which is great on multiple levels. It probably also means that you guys will be able to have an early lunch because we are always like, you got anything more to say? Nah, I don't have anything more to say. All right, we're out of here. unless you guys unless you guys have some questions, in which case we will stay as long as it takes.
And they'll still
So
get their money's worth, so it's all good, even
yeah,
if we
that's right.
shorted it. Yeah.
Yeah, that's right. So I'll since you have plenty of time with that opening monologue, Jack, to consult both ChatGPT and Google about what you want to start with. You got any new items for this week that we should be interested in? I mean, we had a second appeals court that said nay nay to tariffs on some very specific niche areas. You got any stuff you want to talk about?
Yeah, so just generally speaking, that is the case, and it's just going to continue going. It's eventually going to get up to the Supreme Court, and the Supreme Court's going to have to make some decisions, and it's to be seen if it's going to be an overall, okay, you can't do it, or can you do it in certain instances? Can you do it for a short-term basis until, Congress gets a hold of it and approves it or disapproves it, those kind of things. So and it is very scattered, meaning you have different courts in different jurisdictions making their own rulings depending on many times their political slant of those judges. And so ultimately, it just all, like many things at this level, will end up being in the hands of the Supreme Court to make decisions, or basically say, we don't have enough information, or you can't do this or you can do this, and go back down to the lower courts, meaning the trial courts, the federal courts, and work their way back up again until all that to say, don't know how that's going to impact all of us. We've talked on this program before. Sorry, I can't, I'm not supposed to use the word program. My kids hate it when I say that. It's like, what program are you watching? So on this show, on this webinar, we've talked about the, we have clients who are experiencing literally product at the border that is being held up, and they do not know how much it costs them to get it through the metal gate. And it changes week to week. Same product number, same number of crates. And it is, okay, how much do they need to bring to the customs official to get that out into their warehouses? So that is yet to be seen. Also, talking about, and we talked about before, the interest rates, and will there be a cut by the Fed, regardless of all the political back and forth as to who should be on there and who should be fired, and is Powell going to stay on there, kind of thing. I found an interesting article, and it was, who is impacted and what do people think. And so this article that came out yesterday afternoon starts out with, the financial world is holding its breath as the Fed gears up for its mid-September policy meeting, with an overwhelming market consensus pointing toward a 25 basis point interest rate cut. It's a highly anticipated move, is largely predicated on the crucial August jobs report. So tomorrow is a very important day because that's when the report comes out, and it's widely expected to confirm a softening in the U.S. labor market. Investors, economists, and policymakers alike are scrutinizing every piece of an economic data as the Fed navigates a delicate balance. And what I didn't realize was, well, there has not been any cuts at all this year. I thought there was one earlier this year, but they all occurred in 2024, unless I'm mistaken. And so and also didn't realize how crucial this August jobs report was. I mean, it's one of the key factors, but it sounds like this may be the thing that is closest to that mid-September meeting at the Fed where they're going to decide whether or not to cut the interest rate a little bit. And then the article goes on as to what are the impacts to various industries and everything else, including obviously the lending and lending facilities lending industry, which we'll talk about a little bit later as well. So
Yeah.
that's what I got. I think you also wanted to talk about the the job, the tips, wages, etc. But I'll stop there for now.
Yeah. Now the Starbucks gift card for whoever can you know correctly identify the movie this came from. Is this going to be as important as the crops report, Jack?
Can I answer that?
It comes out. So it may be, yeah, there we go. Yep, that's a good one. I'm thinking that since the J, I'm assuming that it's probably Jim. Excellent job. He's our cultural warrior with us. So I did have a wonky question for you, Jack, related to the tariffs and the courts, as we get into it. The what I don't understand about this particular ruling that maybe have an answer to, maybe you don't. So you've got the thing that people are concerned about, independent of like, hey, was it legal to do these tariffs or not, is that if you follow the thread that they were illegal, then it's sort of like, well, what's the remedy? The remedy is you got to give a whole bunch of money back, and it's billions of dollars, and you got to like practically figure out how you're going to do that. Um, I understand that, and at the same time, what I don't understand is if two appeals courts now have said you can't do that, then why are there still tariffs? Like in other cases, usually when a court says you can't do that, like you hear stuff about like words that I don't understand, like injunctions and the blah blah blahs and the hana hanas or whatever. What is like what why are why are they still doing stuff? you know?
Yeah, and that's very much I would prefer to have one of my litigators answer that question. So here is the transactional lawyer's perspective on that, which is that you have yes, it is confusing because we have seen where some injunctions or removal of injunctions has a nationwide effect in all jurisdictions, all states, all courts, meaning on the federal court level, and then the state courts would defer to federal jurisdiction in some cases or interpret whatever the federal law is, which is whether it's the injunction is in place or the injunction has been removed. So, but then you have other issues which are specific to the the litigants. So if you have, let's say, a trade industry in the state of Texas that sues and says you cannot impose these tariffs on us. And even though it may say this is sort of a class action on behalf of the entirety of the population of the United States, if it's specific to a, a group of people that is asserting their rights, then that's why you have this bubble of jurisdiction. When it is something along the lines of a federal agency, or that has the jurisdiction, so you have an agency dispute, whether it is the IRS or something else that is imposing or trying to remove, then you have a much broader net. And so what I don't know is who are the litigants in each of these. I suspect that it is trade groups, probably not individuals. I mean, that's a hefty bill to pay to fight the government, fight the White House on that, but it's likely industries, trade groups, or bands of people that have come together to file in a specific jurisdiction on behalf of those plaintiffs. So that's the best answer I can give you on a very, 30,000 foot level. But that's, and again, really the best answer is it depends, because again, it depends on the litigants, it depends on what the claims are, and it depends on the outcomes. Um, and I'm trying to think what was the most recent thing that it was very clear that it was only pertaining to those litigants. I'll think of it in a minute, that we talked about in the past year or so, that it was okay. Well, um, oh, maybe it was the Corporate Transparency Act. That's maybe that what it was, which is you had some people that were saying, well, you can't apply this to us, but it was specific to those litigants in California or Texas or wherever it was. So not a very good answer to your question, but in the right direction as to the reasons why. But I'll get the answer for one of my litigators in the office specifically.
Yeah, perfect. Well, I appreciate that, Jack. Other thing that hit the news is they released um, some they published some guidance on who's going to be eligible for the no tax on tips that came out, and it's it's kind of a nothing burger, and it's a little bit on the contradictory side. Nothing burger is one of my favorite expressions that I had not heard before, but I like it now. But it so as part of the one big beautiful bill, you know, part of what passed is if you're a tipped employee, you don't have to pay income taxes. But what that on your tips, what that really means though is that for wages below $25,000, which would include your tips, you don't have to pay income taxes. On the positive side, so if you kind of think about, okay, well, how's it really play out? If all that I made was $25,000 in the first place, I already had a standard deduction that consumed most of that $25,000 and exempted it from tax anyway. And then I'm left with, you know, no tax. So it's pretty easy to see that that effectively these people weren't paying a whole lot, if anything, in taxes anyway. So it reads well, but I think the budgetary impact is pretty low. The people that they did say, hey, by the way, there's no you're now exempted from having to pay taxes. On the positive side, what they did is they expanded the list of people who could not pay taxes on tips to include a lot of people that we generally tip. Like, I don't know where you get your haircut, Jack, but I get my haircut at Sport Clips, and I tip them. So, there's also, if I check bags at a flight, and there's a porter out front, I tip him, you know. So the thing is, though, why I said they added people to the list is that the other place that tips generally are impacted in tax legislation is the FICA tip credit, which Jack probably be familiar with because he works with a lot of restaurant franchises. That basically is, that's a piece of legislation that if you have, tipped employees, which typically, waiters and bartenders are going to be tipped employees, your reward, air quotes, for actually having them report their tipped income in its entirety is that you get a credit for the payroll taxes that you pay. So it's actually meaning Social Security, FICA, Medicare, Medicaid. So it's actually a fabulous benefit for restaurateurs. But what's hysterical about that is that who was not included in that legislation, who was not included in the FICA tip credit would be hairdressers. Or my gal at sport clips. So I think the thing is, it what I'm curious to see from here is they're they're requiring that all these tips be reported, somewhere. Like, so in theory, somebody's going to do something with something. So what I'm really curious to see is, are they going to expand the FICA tip credit? How will this income exemption work in conjunction with the FICA tip credit? So there's still, I think, plenty of unknowns that are sitting out there with respect to this. But what I would say is that if you happen to be in a business that generally employees receive tips, and you turn around and give those employees that money, whether it's directly or part of like a tip pool. Like my kids all, worked in the frozen custard industry, Jack, at Wits, when they were in high school, and they get tips at Wits, and then they pool them and then add them to their paycheck, at the very end. So it's like, if you're in that business, um, you need to be reporting it somewhere. So if you're doing your own payroll, good luck. If you're with a payroll company, they should be talking to you about, well, here's how we're going to need you to report tips going forward. And then presumably somebody's going to do something with that at some point in the future for you. So soapbox complete about the tip exemption.
Yeah. So I have the
So
list, and I mean, and they do it by industries. And so you have
yeah.
beverage and food service, chefs, cooks, bakers, waitstaff, dishwashers, entertainment and events, hospitality and guest services, hotel housekeepers, home services, personal services, personal appearance and wellness, recreation and instruction. So, I mean, the good news is when, I'm moonlighting as a DJ, I don't have to, I don't have to worry about that. Or when I'm on the dance floor, exerting my expertise in dancing, all will be well. The reality is that um, yeah, there are a couple things. One is as you said, the reporting of the tips. So you have, you know, you give someone cash. I'm thinking of a hotel housekeeper, leave cash on the dresser. Okay, are they going to report it? Maybe, maybe not. I am noticing more as I stay at hotels that now there's QR codes in the rooms and say, okay,
Mhm.
here. And I would imagine, I don't know if that's personal to the person that is actually cleaning the room or to the host, the staff, and they have a way of doing that. But those are definitely going to be reported and dealt with appropriately. So it's not that you're slipping it into your pocket necessarily. So, there's all kinds of I can see the discussions on both sides of things, whether, this is a good thing, is it going to be abused? Because the dollar amount, deduction of up to 25,000 for qualified tips received by tipped workers in place from 2025 to 2028, unless Congress acts to extend it. I mean, that's not an insignificant amount, and that is amount that is reported, right? So is the dollar amount higher? And I think that, again, Jack theory, that the reason why they did this way and the dollar amount is high is because there is movement towards electronic commerce, even for tips, with Uber, cashless transactions and the ability to leave a tip on the machines that they bring to you for your credit card right on the spot when you're at restaurants now. Finally, the European common sense of how to pay a bill and not lose possession of your credit cards has come to America. So you're seeing more of that at the restaurants and everything else. And so I think that those are the reasons why that number is high as it is. And I mean, there are some occupations that maybe you get tipped a lot more money on a per occurrence basis, but anyway, so those are my observations.
Yeah, that's funny. Like, I wasn't thinking about like gig economy. I mean, pretty much that's probably that's a lot of the bulk of what you're making is the tip. If I just think about, I was just in New York and what I paid my Uber driver and what he collected as a percentage of my ride, pro- probably a good bit of it was the tip, not the actual ride itself. So, and appreciate the questions. We're not going to touch Epstein, although as an individual, I am also curious. We're just not going to touch it here. Um, and then with the tariffs, I think, Jack, this this is my understanding of it, is that with tariffs in the past, it's always been a function of Congress, but they ceded some of that. They basically delegated some authority with the right to take it back at any point, um, if they so chose. But it just so happens they have never chosen. So I think all that's happened here is that somebody that evidently the courts determined had standing, like in other words, like I can't remember what the case is, but I assume what happened is that somebody who had standing because they felt like they'd been harmed by a tariff went to court. Like it wasn't the Republican led Congress who said, "Damn it, sir, you've gone too far this time." you know, it was somebody who had standing, that took it to court and said, "Hey, this is not what was meant."
Yeah, and I
Within the
agree.
confines of the statute.
It's traditionally been a lever amongst other levers that the executive branch has had, with respect to, so you have, economic levers, you have military levers, you have all these things that interplay with each other that, okay, you know what, if you want to, play nice with us in the sandbox, there are multiple elements of the sandbox or multiple sandboxes, mini sandboxes within the big sandbox. So however, whatever metaphor you want to use. So yes, it is a matter of, okay, has the executive branch gone too far, with their, it's not same as before. It's not that, okay, well, as you said, they kind of, Congress has said, look the other way. Not necessarily, that's not a bad, it's not a very good way of saying it. That they have, ceded to and said, and not taken that power back because it was used judiciously, for the most part. I mean, there have been some pretty hefty tariffs over the course of the United States history, but it is, one lever of many, and now it's, in the spotlight as to, okay, so, some people will say gone too far, too fast. It needs to be targeted. There needs to be a legitimate purpose for that, and an economic analysis of it. And will it be impactful? The other reality is, okay, well, if the goal is to bring manufacturing back to the United States, and we, throw out all of these, utilize the levers and say, okay, now, if you want to be profitable or be as profitable, you need to build stuff at home rather than shipping it out. Well, can we build stuff at home? And there we see, industry members, clients that who are embracing that and are building facilities here in the US in anticipation of it not being as rocky as it is now, but that it will change, that, and their economic models have to change in order to be competitive in the US market. And so they are proceeding forward with the building of manufacturing facilities here, or bringing it back to the United States. Others are, well, that's just the cost of doing business and let's see what happens. So, time will tell who had the better plan. But the reality is that for the most part, the capital expense of bringing manufacturing to the United States, can't be done by the ordinary business citizen. Essentially, business owners, it has to be done by the titans, and then will the rest of us kind of reap the benefits of that flow of manufacturing for the most part.
Yeah. So we had a question around CBD industry and who received tips exempt from income taxes too. I mean, they weren't specifically called out, but if I was in that business, I probably would say kind of most closely aligned with a mixologist, which would be, a bartender, because that's kind of effectively what they're doing. I didn't not judge anybody who partakes in the CBD shops. We have a CBD large CBD retailer as a client, and I just didn't know that tips were a thing. When you went there, so I learned something new every day. I think another question that we had is, I joined during the discussion on tax implication regarding tips. Did you discuss any reporting changes for tax changes regarding overtime? Um, I, there hasn't been, to my awareness, there hasn't been any additional guidance on the exemption from overtime, specifically yet, a- as there has been for tips, because that's, the overtimes, um, fairly. I mean, the reporting for it is going to be difficult, I'm sure, but the exemption is, um, or the overtime who qualifies for it is pretty straightforward. If you were, um, exempt under the, Fair Labor Standards Act, or non-exempt, meaning like exempt from overtime or not exempt from overtime, that's gonna rule whether you got paid overtime in the first place. And then, assuming that you were not exempt from getting paid overtime, then, you get paid overtime. And then the only, thing that comes into place with the, exemption is that this one's a little bit more generous. I think the phase out is like 150 grand if you're single, um, or 300 grand if you're, married filing jointly. So like if I'm an HVAC contractor or something, it works kind of quite a bit of an overtime, as part of my pay. This is actually a little bit of a game changer, for me personally, um, in terms of, what I'm gonna be putting what I'm gonna be putting in my pocket, around that, with respect to the time and a half pay, that I'm getting. So it's pretty cool.
Yeah, and I don't have the entire list. I was trying to find, CBD. I mean, maybe under, entertainment. I can tell you that, when you want to get your next tattoo, feel free to tip your tattoo artist because that is on the list. So,
Yeah, yeah, yeah. That says something, about the people that craft the list. There you go. But switching gears to the topic at hand about uncertainty, because we still are uncertain, and we decided to pick this as a theme again, even though we've talked about it, because when we consult our BFF Chat GPT, generally what's on business owners' minds still is uncertainty. And I think that comes down, or that stems from, you know maybe we're just, like, as I'm saying this out loud, maybe we're just all going to be uncertain. Maybe like this is the new normal, is uncertain, because it's funny, you know, under this is just the facts. So nobody flame me for this. you know, Under Biden, you had an administration saying, but everything's fine. Why do you feel like you shouldn't feel uncertain? Everything's fine. Like, we understand prices are higher, but that's a function of blah blah. Gave a you know, perfectly rational explanation for things, and yet people felt uncertain. And then the same story applies now, where there's a disconnect between, as we heard last week, stock markets, still at a record, high, even though it had a blip in there that it's recovered from. Yet, unemployment up a little bit, you know, inflation hasn't come down. We don't know what's going to happen with interest rates. um, so there's still uncertainty that's in the air. So that just, you know, makes people, be not feel, kind of feel an unease, that then becomes a self-fulfilling prophecy of, how that manifests itself in my buying behaviors, going forward. So our point in saying all that is that you can't really do anything about that other than just to be prepared. And the general theme of being prepared that I think we just want to reiterate, comes down to four broad categories. And there was one that I was going to add in here in one of the categories that I'd be curious to get your take on, Jack, that I think in our business, at least, it would be a reason that I would want to be, um, exuding, putting out, some fires. One is, hey, do I have sufficient, cash, cash flow, working capital, all that kind of stuff, available. The second is, Hey, let's make sure that, my P&L is in order, kind of like if my sales drop by 10%, or my gross profit decreases by 10% because of tariffs, do I know how I'm going to make that up, from a profitability standpoint, to meet my obligations. The third is, hey, let's put a big old bear hug around the customers. Let's make sure that, we've got them intact and they know that, hey, here's what we're doing about price increases. Here's what we're doing about uncertainty. Hey, by the way, Mr. Customer, um, I probably could feel a little bit more comfortable about pricing with you if I knew more from you about what you were going to do, like we're all in this together, type thing. And then the last one is putting the bear hug around key employees, and just making sure that, you don't have people hop and ship because they don't think that you have a plan or you have a head in the sand, or they're listening to the news and talking about how your industry is dead, or going to suffer, but they haven't heard from you directly about what you're going to do. So instead, what do they do when they haven't heard from you? They make up the story, about what's going to happen. Oh my God, we're going to be impacted by tariffs. You know, Boss man always talks about how we have slim margins anyway. We're going to be screwed. Customers are price sensitive. I better get out of here, before this ship goes down and find me something. Because you know what else I heard? I also heard it's a hard labor market right now, to get a new job at. So I better get while the getting's good. So you want to put the bear hug around the employees and tell them you have a plan. And I think specifically, you know, at I think there's probably two elements of a plan with respect to employees that are important. One is exactly that. If you were a company that's going to be impacted by tariffs, communicating what your plan is about that in terms of maintaining profits, salaries, price increases, making sure the company is all aligned on that, and everybody understands that you have a plan around it, I think is a fabulous move. I think the other thing too, in terms of the uh, our business specifically, is that I was at a recruiting event last week, and the good news is more people are entering the accounting profession, so the labor supply has gone up just a little bit. Like, it's still below where it's been, but it's gone up a little bit. The bad news for the accounting graduates is that, as is typical, my large public accounting firm brethren have now panicked and just said AI is going to replace everybody, so no need to hire anymore. So the number of people that have internships right now is lower than it has been in the past because people have pulled back hiring in my business on the assumption that AI is going to replace a lot of jobs. And as my kids are all at the graduated college age right now. So, like, a lot of their friends actually are struggling to find jobs. Like, it's not as easy as it was, you know, 3, 4, or 5 years ago to find a job if you're a new graduate. So I think what I'm saying with all that weave story in there, Jack, is that, like, communicating very clearly what your plan is around AI, and what that means for someone's career in terms of, like, I mean, hopefully you're not going to say, sorry, dude, your job's going to get replaced. Instead, you're going to say, hey, I don't want you to think that AI is the death of the profession. Here's how we're going to use it and how actually this is going to be an enhancer to your job, not a takeaway. I think is also important because otherwise people are going to just assume that you don't have a plan and that the whole place is going to go down and their job's going to get eliminated. So I think the more that you can get out ahead of that news cycle, the better off you're going to be. And with that in mind, that's enough out of me. I'll shut up.
No, I totally agree because I mean you're
Yeah.
talking about two things really. You're talking about hiring and you're talking about retention, which when we talk about employees and workplace. And so on the hiring side, it is curious. So I will ask, and I used to ask our new employees, because they come around and they get introduced to us if we haven't met them before. And it's like, so, when I get to talk to them, why did you decide to come to Shoemaker? And they would say the right things. It was, oh, culture, really like the people, this and that. Okay. I've started asking them, why did you leave your prior job? because that will get you, I think, a more honest answer, and might and likely includes, well, they weren't really paying me enough. And so then you get to kind of the crux of it. But then that gives you a data set as to, all right, you now know what is on people's minds as new hires, what is on your new hires' minds actually, and then what your current staff and employees may be thinking. And we've said this many times before, don't assume that you know what they are thinking. Don't assume what they are telling you necessarily is accurate as to what they are thinking, unless you know 100% that you've created an environment where they can tell you basically anything they want, like, eat shit and die. And there would be no repercussions for that. If you have that type of relationship with your employees, despite being disrespectful, but giving them the pathway to be honest with you, then fine. But you really need to know what's on their minds. And with respect to technology, embracing it and integrating it rather than it being a threat. So, for example, and I've said this before as well, the evolution of what our legal assistants do in relation to doing things that they had done traditionally, entering timesheets. I used to write down in code in very sloppy handwriting my time on a piece of paper, which would then be inputted and then would be printed. I would review it and I would, make my changes and then review it at least 2 to 3 more times in the process before a bill went out the door. Now it is either voice recording my voice, doing dictation in directly into our billing program, which then is filtered. AI gets involved. So, for example, if there's a semicolon and then there's a capitalized word after that, it lower cases it. So, I mean, all these things. And what I'm saying that because has our legal assistant position become obsolete because all of this technology? No, it is okay. This is now what you're going to do, which is you're going to check the AI, but your processing of a week's worth of timesheets is going to take 20% less of your time now because of this technology. So now you can use the 20% to do something else. Maybe you're doing some of the paralegal stuff. I say that lightly, administrative paralegal stuff, not the legal paralegal stuff. That way, maybe doing, whatever it may be. So without going too far into the weeds, yes, you need to embrace it. And as you said, let your people know what you're doing. Don't just have them show up, log into the computer, and then, oh, welcome to Copilot. And that's, I see companies doing that, and it's not necessarily that it's purposeful. It's been that Microsoft has said, oh, we have this little module called Copilot and it's AI and it can do all these wonderful things, and it's very easy to install. You just have to flip a switch, and that's what happens. And then so people panic because they don't understand the technology. So that's also another suggestion, which is, as you implement this technology, make sure you have enough training, because you're going to have old school people that are going to be resistant and will not embrace it. But I promise you, once they learn how to use it, they will not be able to function without it. Um, just take a sampling around your workplace or just in general of the age group that is maybe 60, 70, let's say 70 and above. For example, my parents are above 80, but they spend more time on their phones, and it's just funny watching them navigate through this stuff. And trying to show my father how to use Apple Wallet to get his tickets for a CFC game the other day, when he's done it a gazillion times. So again, just make people comfortable in that environment and embrace it. And so, there ends my discussion about employment, recruitment, and retention and technology all weaved into one kind of general concept. But I see some questions popping up maybe in the chat.
Yeah. Yeah, I'll take we can't see names like we used to be able to see on Teams. Another reason we're or another on Zoom. Another reason we're going back to Zoom, Jack, but there was a question about politician who claims that the budget cuts, tariffs, tax adjustments for growth objectives pay down the debt. Basically, is anybody credible? I will take that one since it is indirectly related or directly related to the topic of tax rates and the economy and stuff like that, which is scope of this discussion. Um, so if you Google how many times has the U.S. had a budget surplus, meaning we collected more revenue than we spent, going back to the basically we just say 1900 forward, you know, that as a good as a good data set. Because I can't, like, prior to 1800, the country looked, different. It was agrarian, by nature, all that kind of stuff. So, but 1880s industrial revolution, we look a lot more like we look like today than we did, back in the 1800s. Point in saying all that is that, without Googling it, since I've looked at it enough times, I can tell you it's like 3 or 4 times. And I'm not talking like decades, I'm talking like 3 or 4 years, you know, period. The latest of which was, at the tail end of President Clinton's term. So my point in saying that is that, um, you got a long list of politicians who ain't been honest. so so in other words, like, they all talk about how it's a problem, and then it's sort of like nonpartisan, it's sort of like partisan, districts and gerrymandering. Well, we all agree that it's a problem, but then all of us are not going to do anything about it. So the budget deficit's the same thing. So, um, you're so I think the debate is does the country having debt, is that necessarily bad? Probably not, based on history. It's just the level of the debt and the amount that, is required of revenues to spend on it versus better purposes, that would be better for society rather than paying for stuff, that we racked up in the past. So, had there been tariffs and no tax cuts, or no extension of the Tax Cuts and Jobs Act, possibly we would reduce the deficit. But considering that there is a tax cut plus tariffs, the tariffs, even by, the Trump administration's own estimate, don't fund the tax cut. So they're counting on, when I say Trump administration, like literally the office of the president. I'm not talking about like some bureaucrat that Trump doesn't agree with. This is own team's data. you the the tariffs don't, offset the tax cut, so they're banking on growth. The problem is that the growth rate that they forecast is a growth rate that we also, have not achieved as a country, really, ever, unless you look at periods where there's been, um, hiccups from recessions or depressions. So for example, has our country ever hit a 5% GDP growth rate? Of course it has, but after a period of like 15% contraction. So all that is just coming back to where it was, at a pretty rapid clip. That's not called doing pretty good and got even better. The doing pretty good and gotten even better, that's like literally, for the most part, with a brief exception under Reagan, which then he subsequently lost all the gains. We've never, um, beaten like a percent. So if you see like GDP growth rates, over time, you can Google that too. It's like, you know, fractional percentages are what we're dealing with here. Not like 2, 3, 4%. So I would say, Adam would say, yes, it is disingenuous to say that it's reality that, you know, um, any of this stuff actually, works. So the answer is, if we actually are serious about debt, unfortunately, it would be, slightly higher tax rates, than we currently have, or, if tariffs is the way to go, um, time will tell. Then don't do it with the tax cut. That's sort of like saying, you know, hey, Jack, you know what the Boatsman family did? We cut the cord, dude. We cut the cord, plus we also, but then after cutting the cord, we've got like 4,000 subscriptions that actually cost more than the cord. Like,
Yes.
with less crap, that I actually watch. I mean, that's like the equivalent of what we've done economically. At this point.
Yes, my kids were home this weekend and we went through the list and I was like, guys, I know that between all of us, we're not using all this. Well, of course, one kid uses one platform for one thing and the other one. And so, yes, that if the overall expense is significant. Um, I also want to bring up something that we've talked about, but and just to reiterate, and we talked about it, supply chain and having those relationships. So in a world of uncertainty in relation to products, so your incoming products that from your suppliers, you have those relationships and have those discussions and see how they are doing and what their perception is about what's going on in the US. You would be surprised, and I'm looking forward to. I twice a year I meet up with franchise lawyers from around the world, mostly from the U.S., but some from around the world. And I always ask them, like, okay, what do you guys think of America? What do you guys think of, our politics? And it's just the answers that I get is very interesting from these lawyers, but from your suppliers, if they're out of the country, if your customers are out of the country, or just your downstream customers, have those discussions and find out what's on their minds because I've seen where that having that extra, just one extra communication, like, okay, how are things going in your business? And we all do, I would say we all do not have the sufficient amount of time to do that with all of your customers, but pick a few, pick maybe um, your top five or top 10, and then go down the list on a monthly basis and just check in with them. And then over the course of the year, you'll have that check in with them. Because I will tell you that most are not doing that. And if you want to distinguish yourself in your market of being a service provider or products provider that cares about your ultimate consumer, business to business, and cares about and making sure you have that relationship, that you still have most favored nation status with your supplier. You need to have those conversations, or you need to have someone in your organization having those conversations. And you may find out something that is very interesting, that, okay, well, this is what's happening on our end in response to what's going on in in the United States. So we've talked about maintaining those relationships, but just want to reiterate that I have seen, I'm sure Adam, you've seen the results, the good results, the positive results of those who take the time to reach out to their constituencies in both directions.
Yep, that's right. That's right. I just fun side fact. We're getting a new sliding door installed in our on our patio, and one would have thought that if one went into Lowe's to order said door, that one would not have to wait 90 days to have it installed, but evidently one does these days because the wood comes from Canada. So like, and it's just tied up in all the tariff mess nonsense. So there you go. So yeah, just don't take what Jack said to heart about, hey, supply chain. This seems like supply chain issues may be something other than temporary. At this point, it may be buckle in for the ride and just have that be part of your plan.
And one more point, switching to kind of a financial discussion, which is, just you need to have sufficient capital in the wings. And it doesn't necessarily have to be cash, whether it's a line of credit for the business, could be a home equity line. You hate to kind of mix personal with business, but as business owners, sometimes you got to do what you have to do. But also maintaining, and talking about relationships, maintaining relationships with bankers, it's okay. And I have had clients come to me and say, well, I've been loyal to this bank and to this banker, and I feel like I'm cheating on him or her if I go talk to someone else. And I said, you know what? They're used to it. They know they're in a competitive market, and they know that they can only offer what is being offered to them to offer to you. In other words, whatever bank rate they have, going on, whatever incentives they have at the time. That's what they can only offer what is authorized, they've been authorized to offer. So it's okay to shop, and it's okay to maybe have your business line of credit with a different bank than you do, just for diversification, than you do your operating account in your other accounts. So it's okay to ask those questions. And again, I say that just because I've had clients come to me, I've had friends come to me and say, I just with business questions and say, I feel like there's a material weakness in my ability to react to an emergency situation. Meaning that, if there's a direct impact via tariffs, if there is a supply chain issue, if, there's another pandemic, I mean, whatever it may be, that they feel like they've gotten everything aligned and they feel good about it, but they feel like, okay, in that situation, they're very good about having emergency funds, whether it's cash or a home equity line of credit, but they don't have that discipline, and haven't been able to have that discipline in their business environment. And so to get shored up for those emergencies, kind of thing. So again, just some financial discipline that we're seeing, and I'm here to tell you it's okay. You're not cheating on your banker if you go talk to another banker to see what else is out there and what options are out there.
Yep. Well, hey, we appreciate everybody's time. We'll go one last round, parting shots for any last questions that we've got before we call it and let everybody get on with their lunch. Going once, going twice, sold. Well, our aim is to be helpful. We hope that this was for you guys. I think, key message again is, hey, stick with what you can control, and don't and try to do your best to set the example of a good front, for everybody, meaning like, hey, let's pull the head out, get out ahead of this, and walk into next year with confidence, even though there is uncertainty around us. Let's walk into next year confidently.
And I would say acknowledge that, and it's human nature that we walk around with blinders because we have to be focused on what we're doing. That every once in a while, open it up and look around and just see what's around you on all the topics that we've talked about today.
Yep. Cool. Well, thank you, everybody. Appreciate it.
Thank you. Have a good rest of the week.
All right.